Joining us now is their star portfolio manager, Erin Browne. She runs the firm's multi-asset strategy. It's good to see you again. Why so negative? You're not convinced by this nice rally that we've had?
Look, I mean, we've rallied pretty strongly, about 11+% off the lows. And what we've actually seen is financial conditions ease since the last Fed meeting. I don't think that's what Chair Powell had in his mind when he delivered his FOMC address. And I think going into the month of September, which, as a reminder, typically tends to be a weak month, I think that the market is poised for perfection, and any volatility or any more hawkishness that's priced into the market, I think you're going to see that felt in the S&P 500. The other thing to keep in mind is that expectations are still for 8% year-on-year growth for 2022 and another 8% for 2023. That is not a slowdown or a recessionary environment. And I think right now, given the outlook that we've heard from companies, we just heard from Toll a few minutes ago, the outlook is weakening, and I'm concerned about that.
Hawkish on Friday, is that the biggest risk at this point? What are your own expectations?
You know, I think right now the fixed income market and the equity market are sending very different signals. I mean, since the FOMC meeting, we've seen, Fed rate conditions and hikes be, sort of priced into the market. And we've seen a lot of the dovishness priced out of the fixed income market, but you haven't seen the same with respect to equities. And so that divergence, I think, will converge, following the Powell's address later this week. With respect to what I'm expecting, I think that he's going to try to walk back some of the dovishness that's been priced into the equity market and some of the financial condition easing that we've seen. And so I think he's just going to, sort of level set that given the still, elevated inflation, that the Fed's going to continue to hike.
Yeah, I mean, you're not a believer in this peak Fed hawkishness. I mean, so what happens if they can remain on their hawkish and, hiking trajectory, if you will? But what if that's fine as long as it's not 75 basis points and then 75 basis points? The market seems to be willing to withstand, let's say, 50 in September and then below that in the subsequent meetings. Do you buy that at all?
No, I mean, I think that right now we're still in a period where inflation remains too high relative to expectations. And even in the Fed's more optimistic expectations, they still see the trajectory for inflation at, sort of terminal rate being around 3%, which is not a level that I think that the Fed would be comfortable with over the longer term. So I think that the Fed will continue to have to keep rates tight, keep financial conditions tight in order to bring inflation down. And that is not something that's currently priced into market expectations. The market is expecting, I think, within equities that we've already passed, sort of peak hawkishness, and we've passed peak inflation. And while headline inflation does look to be softening, the core inflation will remain high for the next couple of months, and we'll continue to see that feed through. And at the same time, we're seeing, conditions weaken economically, at a pace which, is quite, fast. I think given some of the ISM and the PMI numbers, the ISM and the PMI numbers that we've had over the last month or so, we should be at levels that are much weaker than current levels with respect to equities. And that's not, currently, I think, reflected.